Let's do a market recap. It's been about 4 months since I've done one, and I really wanted to see if spring would kind of dip and then start to climb back. I was also watching a lot of the inventory levels and just paying attention to the idea that maybe quarterly reports was the better way to go. So we'll see how this works for a little while. Starting right off, I'm going to focus on July sales since we just wrapped that month up. In the month of July, and follow along with me here, in 2023, we saw that the June inventory dipped from $1,695 to $1,464, about a 13% pullback. We saw sales dip from $1,286 to $1,119. We saw the average sales price dip again from $555 down to $540, about a 2.7% pullback. Median sales price also fell about 2.7%. The month supply of inventory rose. So all those numbers kind of track with each other. In terms of condos, we saw the same activity from the single family market down. Sometimes the numbers get a little bit overinflated because we have about a tenth of the total number of housing units in Colorado Springs are condos and townhomes compared to single family homes. So you'll see that sales number went from 213 to 160. I'm not going to put a lot of weight into that because, again, we just don't have that many condos and townhomes. So if 20 more sell in 1 month compared to another month over the historical average, then it really makes a big impact on the percentages. In terms of, the cumulative year-to-date summary, this is really eye-opening. I was talking about this in another video where I mentioned builders are looking at last year's sales volume of 2022 and saying, man, we are really behind on 2023. And that's really evinced right here where they talk about 13,047 total new listings year-to-date. And then this year so far, we've only done 9,585 total new listings. So we're down about 26.5%. And that seems to be tracking with all of the months. The other thing that I want to pay attention to is the average sales price and how that equated to where we were last year versus this year. You'll see $542,862 for 2022 versus $533,106. So about a 1.87% decrease in the average sales price. We haven't seen the massive pullback in values that the federal policy of raising interest rates was hoping to bring about. And we haven't seen that really big pullback in pricing. Where I see the bigger effects of what's going on in the economy is in terms of builder incentives. If you back up to 18 months ago, builders were in it to win it with cutthroat practices. And today I walk into a new build center just to film videos. They are throwing themselves at me with incentives. Please bring your buyers through our model center. We want to talk to them. They know that this is the way that homes are going to get sold. And so there's a lot of emphasis behind that. All right, so now we're going to go over the charts. And these are more for the people who are visually minded. So take a look at this first chart with me. You'll see it goes all the way back to July of 2022, and you see 2,605 homes for sale. Fast forward all the way to July of 2023, and you'll see 2,254 total listings. We're coming back. We are. Yes! We're coming back in terms of inventory. And I think that inventory is going to be the issue that is going to plague Colorado Springs for a long time. We just aren't making enough of it. I was reading this article the other day from Realtor.com or Yahoo News where they talked about Colorado Springs never really had a good supply of affordable housing units. That problem really wasn't shown because we were always so affordable. I remember talking to buyers on the phone back in 2012 and 2013 where I would say that the average price per square foot of a home in Colorado Springs was $95 a square. And now it's, $240. And I wasn't aware of the idea that we just didn't have a lot of affordable housing. Yeah, we had areas like Pikes Peak Park and Security Widefield and older parts of Fountain, but there just isn't enough housing down there. And this article that was written by this leading economist was talking about how the national average for affordable housing, as defined by a benchmark between average annual income, we sat at 12% of all of our housing units being considered affordable, and the national average was 17. And if you take into the effects of COVID and take into effects all the appreciation run-up of everyone wanting to live in Colorado, meager supply of affordable housing has now been stretched beyond its limits, which is why we still see bidding wars on sub $400,000 homes. New listings, just a kind of cool looking chart here to say that in 2019 we had 1852 total listings. And I think that if 2023 didn't have the interest rate issue with high inflation, we'd be hovering somewhere around 2021 and 2022 levels, again, buffered by inventory. Total under contract so far, 1,060.24 for the month of July, as opposed to 2,045 in the previous year. Again, it's that 26.5% pullback. Average days on market. This one surprised me a lot. So if you think back to some of my market reports when I was doing them monthly, and I talked about 54 days on market, that was the apex, and then it steadily fell. So in March, we have PCS season beginning. April, people start thinking about listing their homes because school's gonna be out soon. May, people definitely start listing. June, they list, and then July. Well, what the heck happened? Usually people travel and there's just less listing activity. And I think that builders were still pumping out homes. So as a result, we saw some properties that were languishing on the market. And I don't think this paints the truly accurate picture of true days on market, because there's always those wild ones that have been on the market for 400 days that just skew everything. So if I could dive into all 2,500 listings that are available on the MLS right now, I would be able to pull off those ones that were, say, over 200 days on market, and that number might drop pretty close to 23 to 25 days on market, which is healthy. Sales for July, we see 7,327 total sales year to date, as opposed to 2022, which had 9,718 sales. Again, that 26% pullback. All right, this is the one I spend the most amount of time talking about, and this is the one that people always want to know about. This is a wonky looking graph. So basically it charts the average sales price, and you can see that it rises and falls and dips. I mean, this looks like some stocks in my retirement account, and it goes up and it goes down. Well, again, why the dip from June to July? This I want to know. I really want to understand this. A few guesses. There were some way more expensive homes that sold in June. There was a ton of affordable homes that sold in July that drove the price down. I think there was just a lot of activity at one end of the spectrum or the other in terms of low price and high price that did the talking that moved the average. If we're able to average quarters, this line would smooth out a lot more and we'll be able to understand it. But pay attention to this idea. If you look at the median number, and we saw 482,000 back in July of 2022, and you look at July of 2023, 472,000, we're basically $10,000 off our high from July of 2022. And if you back up 1 month to June of 2023, you'll see that we actually eclipsed that in our median sales number. And remember, median is just the most frequent sale price, not the average where you blend everything together. So according to this, we actually recovered our losses, as opposed to what I shared earlier in the video where I talked about a 1.8% pullback. This graph really kind of lays it out for you that, hey, we dipped and we came back. So anyway, that's my market recap for July of 2023, also kind of going over the last couple of months. Hopefully you found this information helpful. If you want to dive into more of these fun analytics, reach out to me. I can have a very geeky conversation about all this stuff. Thank you so much for watching and enjoy the rest of your day.